one topic that you guys would like to discuss today. And by the way, I am recording. Okay. All right, I'll pick one. So, I really want to talk about, it was funny because, you know, I spend a lot of time on the internet, you know, when I'm bored, especially with this lockdown. I'm sure we all do. And I found this guy that was making a living, or at least he was claiming he was making $500 a day scalping. So whenever I see things like this, I always like to take a look, especially when they get like 600,000 views. I want to find out, what are these guys doing that can get these views? But anyways, cut a long story short, he was trading pressing limits. That's it. That was this whole strategy, was to trade the S&P 500 and to trade pressing limits on the S&P 500. Okay, just get off of here. And so I'll share it with you right now because it was kind of cool. So this is his strategy. So what he was doing was, obviously, we have a press higher here, right? And he was trading traps, which was really cool. So in other words, when the market came up, the market presses higher here. So we know that that looks aggressive to moderate, right? Now, what he was doing, which was really cool, is he was following the 21 EMA. And what he was doing was he was trading a trap. So when the market, you can see here, pressed lower, if you were with the 21 EMA, he was basically trading a trap here and going long as a scalp trade. That was his whole $500 course. Find the direction of the 21 EMA and trade a trap trade if the trend is good. Does that make sense? So his trade was actually right there. Very similar to our type of trading. Isn't that cool? Now, obviously, he was claiming a 95% win rate with this, which it had me take a second look at it, right? Because you're running the risk that you get a press higher here, which shows you the buy campaign is in effect. Then the market comes here and there's a press right there lower, right? So this could, we know, this could be the start of what? What could this be the start of? You guys know what it is. It could be the start of a new sell campaign, right? But he was trading as a trap. So in other words, he was saying, well, he was making the assumption that this was a trap and that these guys that were going to short too soon here were going to get squeezed. And that's exactly what happened, right? Now, if you're trading like the S&P 500, it's very trappy. It's very, very trappy, right? It's very trappy. But it's a cool little system, and he was actually selling that system, like I said, for, I think he was selling it for like $500, right? Where'd it go? There, this guy right here. Now, he started making a bunch of videos where he was making $500 a day, And then all of a sudden he disappeared. Stopped making videos a year ago. But cool little system, right? Now, I share with you these things that other people do because I want to stress how people can have like pieces of the puzzle. So obviously this guy has an idea of traps, he has an idea of trends, and he has some idea of how pressing limits work, right? As a matter of fact, he's using them counterintuitively. So, for example, the market resumes its trend here, makes a high, comes down lower, and right here, we should see a press lower, shouldn't we? Now, this isn't at an all-time high, but this could also be the start of a new sell campaign, or this could be passive value, couldn't it? Right? But in overall context, the way that I teach you guys, we would never take that short, and that long there is actually a fairly, it's interesting. Obviously, we'd be buying down here, so we're going to get way better prices than him, right? But it's neat. It's neat, and that it works as a little scalp. And that's all he was doing. He was just taking 1 point, or in the case of the SPY, 25 cents. All his trades were little 25-cent scalps. Quite ingenious. Quite ingenious. Okay? Now, same thing here, traps. Now, we would have bought this, if you would have taken my course, we would have bought this right here, wouldn't we? When you become more advanced, obviously, passive value. So we would have got in way better prices than him. But it's neat. It's neat. So when I watched that, I thought that's really cool. And the reason why I did like that little strategy is because he was trading the futures contracts. And if you have a small account and you trade the futures contracts, right, it only takes $1,500 to make $500 a day, and there's no pattern day trader rule. So, you know, sometimes I share stuff with you guys because I know you have small accounts, right? And all it was traps. He's trading a failure of a pressing limit with the trend. You guys understand that? Basically, this is exactly what he was doing without even knowing what he was doing. We have a trend. And what he was doing is when he has a decent trend, this is what he was looking for. He was looking for one press lower, and then he was looking for the squeeze. Of all these traders that are anticipating a trend reversal. There you go. I just saved you $500 on his course. I figured it out in 2 seconds, right? Once I saw what he was doing. But it's pretty effing genius, right? It's a pretty good little system. Now, he only trades the S&P 500 with it. And again, all he was doing was he was looking for a long right here and basically 25 cents. So if he was long at 72, he'd be out at 395. Now, the problem with his little system Where it failed is he has a 1-to-2 risk to reward ratio. But he's claiming a 90% probability on that little scalp. That's it. Just a little scalp. As soon as he gets that, he moves his stop to break even and he holds a runner. But if you are trading 2 contracts of the S&P 500, then and you got out 1 contract at a quarter point, right? Because just so you guys know what the S&P 500 looks like, what is this? The S&P 500 there it is there. So it trades in quarter points. In other words, think of the spread as 25 cents all the time. So his trades were just little scalps for 25 cents. But you could, and that the reason why I liked it was because with a $1,500 account, you could trade 2 contracts, right? And each point would be $150 profit, right? So if each point was $150 profit, what he does is, it's all you need is like that 1 quarter point. So all he does is he says, okay, I'm going to have, here's the problem with it. He's using 2 to 1, sometimes more. So let's say he has $500 risk. I'm not exactly sure what his risk was. And so he makes $150 profit on 1 contract. And then he immediately moves to break even, or he lets his other contract run. And lets the other contract run. Okay? So here's the problem. If you have a 90% win rate, which I'm not sure it's that high, right? But that's what he was claiming. But if you have a 90% win rate, so 90% of the time, let's just assume that you make on average with the runner, let's say $200. But 10% of the time, you lose $500. Right? Now, I'm going to go and check, but I'm not sure if he's losing 500. He could be losing more. I think it's actually more, because I think it's going to be more like 1,000, because he would need at least a 4-point spread. So how does that math play out? Let's just see here. We'll say 1,000. 1,800 to 1,000. What does that mean, Norman? So if you won 200 times 9, 1,800, Right. And then you lost 1,000 every 10 times, your net profit would be $800. Right? Assuming a 90% win rate. Assuming a 90% win rate. So what would happen if you had an 80% win rate? Well, is it realistically sustainable? I don't know. I don't know. Obviously, he's missing, again, he's missing context, right? He's missing context. But what if you guys wanted to just take a look at that? What if this were buyers in aggressive control? And what if the underlying was strong on the day? I think that's pretty cool, right? Now, obviously, we have a better way of doing it. We're going to buy down here. He's buying up here. He's overpaying. But what I teach you guys is to buy down here and to go for 5 to 1. I'm not sharing this system with you because I want you to go and do it. I'm sharing it with you because I want you to understand that the retail world has pieces of the puzzle. This is just a squeeze with the trend, right? The trend trade squeeze. Now, I didn't buy his course, so I don't know everything that he's teaching, right? And I'm not knocking his course, but I'm saying that as I've shared a couple of strategies with you guys lately that are not mine, I'm sharing them with you to contextualize how much better of a trader you are when you use everything that I've taught you and then have a context and an understanding why something works and why something doesn't work, right? But it's a cool little system. Maybe he can do it. Maybe. I don't know. But neat, right? Okay. So I wanted to use this method because let's say we were trading something on Friday. Let's see if we can find something that we would like. Wow. So thin. Too thin. Wow. So many thin stocks showing up. Too thin. Too thin. All these thin stocks. Oh, that's a little bit better. Sorry. I had my scales out a little bit too much. Ah, stupid me. Okay. It's probably a bit too thin. Also looks like moderate value. Oh, for goodness sake, Steve. Moderate. There wasn't a lot on Friday, was there? There we go. Nah. Questionable at best. I thought the market was so strong on Friday. I thought there'd probably be a bit more. Let's see. Anything that we would have traded here. Nothing. There we go. Okay. Too thin. Bit too thin. Too thin. But we'll use it as an example. Okay, we'll use it as an example. So this is one that we may have found on Friday. Anybody find Fro on Friday? Doesn't look like there was a lot. Okay, neat, right? It's too thin. We wouldn't have traded it because the spreads are too wide. But I'm going to use it as an example. So this one would have definitely, you could have found on Friday, right? Now our trade is a long right here. And that offers a 5-to-1 R to R. Now, you do have a press lower here. But what's really cool, and one of the things I take away from, this is why I watch other people's stuff on YouTube, because it's always expanding my mind, right? It makes me feel good about what I teach you guys, because what I teach you guys is so much better, but it always expands my mind. Now, his whole concept, which I liked, was trapping these new shorts that think the market is reversing, right? That's the whole concept. So how could we use that type of information doing what we were doing? So we're looking for 5-to-1 on our money here. But when we know that there's going to be trapped shorts here, maybe we could squeeze 6-to-1, 7-to-1 out on a trade. Does that make sense? This is a bit of an advanced thing, but I don't want you implementing it right away, right? But I just want you to watch for it. So when you get 2-to-1, which you got right there, you got 2-to-1 on your money right there within a couple of minutes, right? When you get 2-to-1, and you know there's trap traders. Now, what's going to end up happening with those trap traders? If it squeezes, it's probably going to squeeze more past, or a bit more past, our 4-to-1 ratio, right? So let's see what happened. Boom. So there's the squeeze. Now you see the volume that comes in at the squeeze? I'll do a little class right here on volume. if this volume right here should be equal to or more than this volume of all these trap shorts. Now, I wish there was a quick way to see that and calculate that, but you can eyeball it, and it's not. Now, if this volume was way up here at 100,000 or 120,000, it would mean to me that it's potentially a reversal. There's a quick little lesson on volume for free. Because all of these trap shorts just got squeezed out. But I think this is going to go further because that volume is not climactic enough. Does that make sense, guys? Right? And as you can see, it does exhaust, but I knew it was going to run a little bit further. Okay? It wasn't going to be an immediate reversal, and it kept running a little bit higher. You can see it almost ran 1% higher. Didn't look like much because it's an $8 stock, but you get the general idea, the gist of it, right? Okay? So, cool little lesson, right? It's just about pressing limits. So when we see this pressing limit here, you have to contextualize it. When we see this pressing limit right here, we have to contextualize it and say, in this context, is what the question should be going through your brain, is in this context, are they more likely to get squeezed, or is this more likely to be a real reversal? How many of you at this stage of your coaching feel that you can answer that question with some degree of accuracy? Let's look at some other stocks. So in this particular case, moderate, right? You then get a press lower here. But all it did was take it down to moderate value, right? Where they ended up buying it again. Cool stuff. You guys get that? You guys see that? That's all that happened. This one we have no clear picture. This one's passive, right? So when you get a press here, I'm not going to answer this question. I want you guys to type in the answer. When you get that press lower right there, could that be a good trade to short for a reversal? Answers. I want you guys to answer. As an advanced trade, now obviously not what you guys would be doing, but can you see how contextually this trade didn't turn into a trap higher? Come on, guys. One guy took a shot at this. Norman. One guy. Come on. I want the rest of you to answer the question. Answer. Give me a damn answer or I'm ending this call. So the question is, could you see how this could be a failed trap higher and an actual reversal? That's the question. In this context with passive value. Okay, Drew and Norman. Lynn, Renee, unless you're just recording it. Maybe you guys just jumped on and are recording it. I don't know. Okay, so, but can you see that, right? You guys are frustrating the hell out of me. How about when you get down here, guys, and you get a press higher? Can you see how that might be a move higher? And you did get some reaction, right? You could have made some monies on that. Okay, no worries, Renee. Let's keep looking here. Let's see, anything. I'm looking for thick stocks, and I'm not just cherry picking. I'm just looking for stocks that are thick enough, because when you trade thin stocks, meaning lots of gaps in them, anything can happen, right? Oh, for goodness sake. Hopefully I'll find another couple of examples here. Okay, here's an interesting example. Tell me what you see up until this point in time. Where would you guys be buying this? $47.31? Right? Everybody agree? Okay. So here's the question. When you get a press lower right there, is this likely to be a trap to go higher? Yes or no? Is this likely to be a trap to go higher? No. Now, what if you were a super advanced trader like me? Could you take a short down to value? You could. Right? If you had a good risk to reward. I hate saying stuff like that. It makes me sound like such a dick. Yeah. There's 2 to 1 on my money. Now, obviously, I would not do that, especially on a day when the spider was up so strong. But it shows you the power of pressing limits, right? And obviously I would have probably gone out and checked a higher time frame. Right? Maybe I would have done that. If the spider was weak on that day and I was looking at that higher time frame, I might even take that short, right? But I'm sharing this with you because I want you to understand the significance of pressing limits in context. Everything has to be placed into a context of what the rest of the stuff that I teach you, you know, the order flow spreadsheet, value, liquidity, all the rest of that stuff. This actually took out liquidity up here, didn't it? So this little press right there, again, I wouldn't have taken it because the SPY wasn't in context. But can you see how that, if the SPY was contextually, you know, down 20 or down maybe 40, 50% on it, not 40, 50, 0.5 or 0.2, 0.3% on a day, that wouldn't have been a terrible short, would it? Pressing limits. You got to know how to contextualize what you're seeing in the context of everything that I'm teaching you. Here's something interesting, a bit more advanced. Yeah. This is a bit more advanced. It changes. Now, what about this context? Could you trade that to value? I don't think so, because it changes, doesn't it? It starts to get more aggressive. Tricky one, right? You think value's down here, but it's not really. You think value's here, but it's not really. It actually, value is here. But so when you get this, that little pattern that he looks for, it doesn't surprise me that it squeezes. And there's that big volume candle I told you about. Do you guys see that? What is all that volume right there? That's all of these trapped shorts that were thinking there was going to be a reversal, right? So all these guys. Now, I'm going to be very honest with you. When I see that high volume right there, that tells me the move is over. It's over. If anything, this could be new longs piling into that market, and I'd watch for the longs to get squeezed. Now, obviously, I'm never trading short on a day when the spider, unless I'm trading a penny stock, is up 1.6%, right? I'm never trading a short. But if the spider was down, and you can see it really didn't go too much higher than 22.32 after that climactic volume ended. That was really the top of it on the day. Later on, it woke up, but you get the idea. Never trading short. But let's look at one that I actually did trade. Okay. Okay. So here's CLUE, which I did trade. And you can see why I wanted to short this thing. So when it spikes all the way up to these key levels, right? Okay, see you later, Germs. Now, it gets halted, it gets halted, it gets halted, and then boom, big rejection, right? Big, big, big rejection. Sorry, guys, I'm trying not to strain my neck. Big rejection. And then we press lower right here. So this level becomes a really key level for me. Right there. And if you guys go and look in the room where I shared this my trades with you on it, I think I put a picture in, didn't I? Yeah. I was leaning against that level right here. You can see. Now, I actually got in right there, believe it or not. I had a market order working on that last halt. When they halted the market way up here at 750, look what happened. So here's the pre-market, and there's the halt. There's the pre-market. This thing spiked to 13 in the pre-market, right? I actually put a market order there. Don't get me wrong, it was small size because it was by checking and making sure alt history, one sec. Making sure at that time of the day it was a LUDP short, which is basically just a pause. You don't want to see a T3. That's bad. You don't want any news. It's just a pause so the market maker can balance the orders, right? So when we're up at this level up here, I was very comfortable putting a small market order in to get short. I waited the whole time. I didn't short before that. Why didn't I short before that? Press. Right? And so here's my short. My first short is right there. And when it opens, it just flushes from 7 down to 6 instantly. Now, they don't always do that. So you gotta really know your shit, right? And you really gotta know your levels. But that's why I took that first short with small size. Now I actually added to my short, right? And don't ask me why, but I changed my mind. And then I got out. And then I added to my, I got out again. So I scaled out of these two trades. And then I added to my short again right here with a stop just above that high. And then I added again. No, sorry, I scaled out. I scaled in. Don't ask me why. But you can see, I'm scaling in and out quite aggressively. We picked up a little liquidity here. And I had an ultimate target on this stock when I look at it. Well, so when I was watching this, I had a target of these lows. That was my ultimate target. From way up here at my first trade, my ultimate target was these lows here. So that's why I was so aggressive at it. Now, it did freak me out a couple of times when we spiked up against that level, but ultimately I got my target. And if you check in my floor trader room, you can see it was a very nice day for me. And that was on like $300 risk, maybe $400 risk. Again, guys, like all just understanding the context of everything, right? Obviously, in this case, the big daily, right? Obviously, in this case, a micro float. Obviously, in this case, understanding where liquidity was resting. Obviously, in this case, being patient and not trading against these pressing limits here. Right? I was patient and I saw, nope, wait. Now's not the time. That got way too far. Aggressive trade. And then once it rolls over, it becomes very, very safe for me to lean against these levels all day long. See how it just respected that level? This was a little bit freaky, but this is a very, very advanced trade. This is actually the reverse of what that guy was talking about. This is actually a trap. Let's look at that, because it's a really good example of a trap. And there's a reason why this trap works really, really well, especially on these penny stocks. Does anybody know that one of the favorite patterns that these penny stock retail traders teach, if you go and buy these penny stock gurus that sell their courses to you for gurus and how to get rich trading penny stock, do you know the #1 pattern that they invented, quote unquote? And for $1,000, they'll teach you how to trade a cup and handle long. Now, don't get me wrong, a cup and handle is a decent pattern. But without knowing context, you're going to just get trapped. And that's what that was. See all this volume coming in here? All this volume coming in here. It's all the guys in all the guru chat rooms, which they have 600 members and I have 30. So clearly they're much smarter than I am. They just got trapped because they couldn't really contextualize it. And that's why it just flushes, 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 right down to pick up what? Liquidity. All pieces of the puzzle, guys. Right? All pieces of the puzzle. Just got to know how to put it together, which you guys all know how to do now because you're my students and you're not a sucker. Okay, guys. Hope you guys enjoyed that lesson. Any questions before I wrap it up? This is a bit advanced, but I thought I'd share it with you. Hopefully it opens your eyes a little bit. Okay, that's it. No questions. I'll see you guys later in a couple of weeks. Bye for now.